What's up, guys? It's Brendan from Market Makers Pro Trades. Guys, the Fed news. Did you watch the Fed news? Did you see the press conference after? It was laughable. But we got a major pump candle from it in the indexes, okay? We're going to go through that in this video. Let me give you my thoughts real quick about the Fed press conference afterwards and what the Fed statement said. So basically they said inflation's higher than they wanted it to be. Look, we know that. What they did, though, was they doubled the taper. Okay, so now the taper, the bond buyback program, ends in March instead of June. That was not enough to really help the economy. What they did is very beneficial to the markets. It's not beneficial to the average person in the U.S., okay, because we have record high inflation for decades. We haven't had inflation this high in 40 years. And they're saying consumer inflation is 7%. The new inflation numbers came in. We talked about this. Producer inflation, people that make energy drinks, people that make clothing, cars, things like that, that's up 10%. Do producers pay that? Are they going to take 10% less profits for their raw materials and labor costs? Or are they going to pass that to the consumer, who's then paying their portion of the inflation as well? On top of that, the Fed doesn't consider rent, which is up 27% nationwide. Cars, buying objects you need to live, like a car, a house, things like that. They don't take any of these asset prices, and used car prices are up 30% nationwide, 30%. Home prices, you guys know how high those are. They vary region to region, but all of them are up, okay? Lumber construction costs are up in some areas 150%. In my area, in Florida, they're up 100%. Everything is super expensive. Anybody that gets gas, which is up 50%, anybody that gets gas knows this, or groceries. So the things you need to live, gas, clothing, a place to stay, the Fed doesn't count that for inflation. So they didn't need to do anything such as raise the rates. If they raised the rates, these pump candles would have turned into dump candles, and that's what they didn't want to happen. That's why I told you Joe Biden came out and said inflation's going to drop off next year. We're at a peak. But I don't make predictions about inflation. That's what Joe Biden said. Typical Joe Biden statement. Probably doesn't know where he is or who he's talking to, okay? That's who we have for a president. What a sad state of affairs we are in this country. But guys, doesn't matter in the sense of we're trading, okay? So we're going to trade up and down. So let's jump into the TA. I'm going to go over a few of the indexes today in this video. SPX, guys. So what happened? We had our parabolic pump candle as the press conference is going on. I saw this. We passed the 200. I traded this. And now you can see we're retracing some. But where are we falling to? We're falling to some type of support, right? Well, visualization, guys. Let's go ahead and visualize the support using a Kumo cloud in the Ichimoku trading system. We are above. We fell to our moving averages, this red cloud right here in Ichi. And here's your support cloud. Look how thick and billowy this is. This is part of the reason why the SPX made a new all-time high, guys. A new all-time high. And now you have profit taking, retail taking profits are getting dumped on, and price retracing. So we want to see if this continues to move up. We're here in the 4-hour time frame. We have patterns that take us out much further. And of course, we're just watching this and trading it as price settles, okay? So let's go ahead and look at the 1-hour time frame. The 1-hour time frame, guys, you know, Fibonacci patterns, pattern trading, patterns form regardless of the news. This is really cool. I want to show you this. So while that press conference was about to happen, I had a dragon pattern down here, okay, waiting for price to descend. I drew it when price was up here, and it descended, hit this, and look at this rise. Now, obviously, this candle's not from the dragon, but this is a bullish pattern, and it was just really cool how it ended up playing out because, again, this candle is from the Fed giving the news that it gave, but I just want to show you how it translates in the charts. You got above the 1618 for a price target on this trade, okay? So we had a bullish pattern forming based on price movement, and then when the Fed was talking, boom, it shot up. So we probably would have gone up some anyways. Would we have gone up that high? I doubt it. But I was planning on trading it regardless. So that ended up being a really fun trade. Now, guys, looking at the NASDAQ 100, this hasn't really, this fell a lot harder, okay? NASDAQ is where all tech stocks are. They're getting beat up. They're getting so beat up that they're jumping in Kathy Wood's ARK ETF. She just loves the bubble companies. She should write a book, How Not to Build an ETF. But let's look at this right now. So you have one 4-hour candle dropped you down. Let's see where we are with Ichi using the same methods here to see get our support. I wonder if we fell through it or not. Yeah, we did. See this? Same time frame, 4 hour, but we fell through Ichi. Okay, NASDAQ dumped harder, and now we're trying to retest the cloud to get back up into it. NASDAQ is just, I mean, NASDAQ 100 particularly, I think there's 5 or 6 stocks that hold up that whole index, okay? 5 or 6. And when they start getting beat up, like Microsofts and Teslas, when they start getting beat up, you're going to see severe retracements. So this is what's happening right now with the NASDAQ 100. And again, this just happened. I didn't make a video yesterday because there's nothing to TA with the pump candle. And now we have a dump candle. It's really hard to show you a lot of TA because you need candles. You need patterns to form. And right now you had a pump up, 2 or 3 candles, and boom, drop. So, I mean, that's the TA. So we fell below support here on the NASDAQ's the key takeaway. We got to see the momentum. Today is Thursday, tomorrow's Friday, so we'll see what happens. Even the Russell, even though it's in a distribution box, which is just brutal on the Russell. These movements are all over the place on the Russell. The Russell had a black swan, okay? The Russell had a bullish pattern form, and when the Fed gave that news, just like that bullish dragon, boom, you got some movement up, but because it's the Russell, and because it's small cap, you're already retracing. You gave up half of your pump candle already, okay? And you're below the 200. The small caps lead the big caps, guys. When the Russell drops, and I gave you my neckline here out of my Darvis box, when the Russell falls out of this Darvis box, this is marked down, okay? So Russell's key to watch because you're in a distribution box characterized by Wyckoff, by wild or high volatility price ranges, okay? You're going up here. I showed you this already, but you are all over the place in price movement. This is like, I think 13%. Yeah, like 13.36. You're down at 4% all the way up to 13%, back and forth, making new highs, then dumping back down. You're in a giant distribution box. You're below the 200. When this thing falls out, and I have that number at 2085, you're going to see corrections in the other markets, okay? You're going to see them follow suit. Now, this could stay in here for a long time. We could be going into January. We have to track it. We have to trade it, and we'll follow it. This is a 4-hour time frame, but as you can see, this is a lot of candles up here now. You clearly had a markup period where you can see your markup right here. You have your accumulation, boom, markup, and now you're in distribution, and you can see this sideways lateral movement that's been going on a long time now, all the way since, I mean, really, this box started in February. You see that? February. So February, so you've been in this a long time. How long will you stay in it? When you lose that box, when you lose that number, 2085, if you don't retrace back into it, watch for some things to change in the marketplace. So this is kind of like a leader. You have to watch the small caps. If these things go super bearish, the large caps will follow. And you get that little delay, hopefully, where you can get some good trades in as well. So let's check out one more thing while we're here, guys, a DXY. The dollar was pumping during the Fed news, okay? The dollar was pumping, as you can see over here. The dollar pumped up, and then what happened? It started to retrace as soon as the market started pumping, and then the dollar dumped, and then the markets retraced today, so the dollar recovered a little bit. So, again, everything's confluent with each other. We just have to watch this. And when did that come up? We just have to watch this and see where it goes. It affects our currency pairs, and I'll be doing a Forex video with TA tomorrow, guys. All right, guys, hope you enjoyed the video. Smash the like button for me. Help me out in the algorithm. And, guys, if you want to try out our Pro Trading Room, we're doing a Christmas special right now. So talk to Lee, download Discord. He'll message you. You can message him. We'll talk about the different membership offerings we have. If you want to trade these markets with us, catch these fun roller coaster swings, love to see you in a room. It is a private room. We have about 200 members now that have joined in about a month. So love to see you guys there. Talk to you soon, guys. Happy trading.